Monday, March 18th, market analysis. Stan Ehrlich, good morning from California. Currently 9:40. I'm starting a little bit early this morning. So let's go to the spider. The S&P 500 is the first chart I usually start with. And by the way, you can always reach me at info@ersignals.com. We have a pop-up market this morning. We opened, gapped up higher, but really haven't done too much since the opening. And this is your daily candlestick data. Looking at the 1 minute, you can see that it opened sharply higher and didn't do too much after that. Rallied a little bit more, almost made some new lows, not quite, and is around the middle of the range of the day. I am still looking for a larger downside correction and expect to see lows lower than the last 2 or 3 weeks. I hope this week. I expect this week. So if we do start coming down very substantially today, we will have been higher than Friday's highs. And in some cases, not all of them, overbought territory, providing the probability or possibility, I should say, of a bearish engulfing ER sell signal, which will turn red and lead me to the conclusion that we will see lower levels very, very quickly. Next chart is the E-mini. Today's high is higher than Friday's high. Unfortunately, we haven't been overbought within the allotted number of days. The last time we were overbought, frankly, was on March 4th. So I'm not going to get any signal, even if this does end up closing below yesterday's lows, although it will be a bearish engulfing Japanese candlestick, which is bearish. It won't be one of my personal signals, which combines a customized relative strength with the Japanese candlestick pattern. Next chart is the 1 minute. Actually, it's the 15-minute E-mini. You can clearly see we're above the high of Friday. Not totally a new high ground, but not very far away. And, we've got an FOMC meeting coming up in the next day or two. So that might cause the market, fairly probable, to move up or down some significant amount. I'm expecting it to be down. Next chart, QQQ. Basically the same commentary. This is the daily candlestick. And we've been going, for all practical purposes, sideways now for about 2 weeks, 2 or 3. And all we need to do is start closing below the low of Friday. I thought Friday was going to be the beginning of the break, but I was wrong about that. We popped up significantly today. No damage done, no bullish signals, nothing but some support short term, ending up holding, and we got a little pop back up. But all that'll go bye-bye if we start closing below yesterday's low anytime in the next several days. Next chart, QQQ. Of course, the NASDAQ, same thing, popped up, actually made a tiny new low this morning, a little while ago, and it's still a little on the soft side considering today's range, but we are up 5.66 at the moment. So we'll see what happens. Now, if you love the bull side of the market and you think I'm full of it, what will happen is the market will come down to approximately Friday's high and turn around and start to go back up a lot. Next chart, NASDAQ daily. We've got the topping out formation. Looks to me like it's still in the process of developing, but there's a good rally at the moment. NASDAQ June futures contract 1 minute chart. Well, it's a 15-minute chart, but a minute, some number of minutes relative to daily. I like these some number of minutes, 1 minute, 15, 30, whatever, to give me a lot more detail, and that's why I use them. Also, the strategy is plotted on both daily data charts or for that matter, 1 minute charts as well. I don't have anything plotted here at the moment. So, same comment. I think we're about to start going south. Next, Russell, daily, back up into a major resistance area, but that was a week or so ago, and it did top out. We didn't have any signal. or resistance stopped the rally. Now for the 1 minute Russell, or actually 15-minute, you can see that it has broken short-term last week or two support and stayed below. So this is already on its way down, and I think the other indexes are going to do the same darn thing very soon this week, maybe the next day or two. Now bonds. We do have the lower low in bonds again. Just exactly what I was talking about a couple of weeks ago at the top. Now we're back down in support, and we are almost oversold, but not quite. So the bonds, in my opinion, could slip a little bit more. 117.24 looks like about the right price, and then be oversold, and then be at support at the bottom of the support area, and then be a prime target to rally. The notes. I'm sorry, this is the bonds 1 minute chart. I'm sorry, 15-minute. And we're right there at previous lows in detail. So let's see it start to bounce. Next. Or it's going to go down one more leg. And I'm not long-term bullish or even intermediate-term bearish. I am long-term bullish. But short-term, slightly more maybe reactionary. We're close to being at a point where we're supposed to turn up. This is crude oil. Now, for the first time in quite a while, we're overbought. The rally has come up quite a chunk here since essentially December 13th. We're in a resistance area, and we're overbought. Prime target for it to turn down. I'm looking for a reversal. We got the heating oil. Almost the same, not quite overbought, not quite up to resistance, but lagging behind crude slightly for the heat. So a little more strength is potentially going to happen and then turn down some. Next, natural gas. Pretty much the opposite. We're near the lows. We just came off of a support area. The previous lows, which were made on February 19th. And these are all specific futures contracts. This happens to be the April. Tradable. Now, slightly up on the day, not much. Inside trading range doji. Really need to see it start to close above 1.777. And then we'll start to see some progress on the upside. So I'm turning slowly friendly. But we need to get up to and through that resistance area that we have been below a couple of times and see what happens. I don't think we're going to break into new low ground. Not out of the question or possibilities, but almost oversold at previous lows. Should do what it's starting to do, cause a bit of strength. Next chart. Unleaded gas. Not getting a quote. I still have trouble with the ICE exchange and quotes, so skip. Gold. New lows, no surprise. We were very, very, very overbought. I talked about this at the time. This is extreme overbought condition, highly unlikely to stay up in the lower to middle 90s. Very rare situation. I'm looking for a further move down to the support area at 2104 to maybe 2070. Next, silver. Overbought for the last couple of weeks. We did get a sell signal a few days ago. It didn't work. Small loss. I'd love to get other sell signals like we got last year, which was an unbelievable series of buy and sell signals. They were whoppers, one after another. Top and bottom and top and bottom. Sell signal on top, sell signal on top. On the bottom, I forgot this one. On the bottom, huge. On the top, on the bottom, on the top, no, no, no. On the top, and we're waiting for another one. Been a little while. Could happen soon. Doji so far, nothing happening today, inside day. And platinum. Almost at resistance, not quite overbought. It's still turned down today. New low for 3 days. Not that big a deal. We're between a rock and a hard spot. Look how long we've been going essentially sideways ever since last summer. We need a major breakout to start a really big move. Next chart, high-grade copper. Well, Resistance has been overcome. The rallies have stayed above resistance, and we've seen higher highs for a couple of 3 days now after the resistance has been overcome, which was last March 13th, just a few days ago, Wednesday of last week. We're overbought. That tells me we're supposed to turn down very soon. No reversals yet. Just slightly higher on the day at the moment. Watching for reversals, watching for the beginning of a downside move, which should get back to support at least. If it starts to sink back into this other trading range and get below 3.9, then it's likely to go all the way down to 3.6. But that remains to be seen. Right now, all I'm doing is looking for a short-term downside correction to support. We got soybeans. Did get oversold. That was a couple, 3 weeks ago. And now it went all the way up to overbought. And that was a spike rally high on the 14th. Let's spread this out just a little bit so I can get more resolution. Thursday of last week, big rally, but it didn't hold. I think that was somewhere between 20 and 30 cents rally, and then it gave it all back. So what are we doing? We went down on Friday and then came back to about the same. Today, we're sinking just a little bit, but the activity on last Thursday does not, and I said so at the time, bode well for more rallying. On the other hand, we haven't gone down much either, or up. Let's watch closely. This should go down some more. Bean oil, overbought, pretty substantially so, 85. Almost at resistance. Looking for a reversal. We do have the possibility today and within the next few days for getting a red bearish engulfing, even today, because you've got the higher high. You're currently a little lower on the day, half a point, 0.54, 54 ticks. If we can get below Friday's lows, we will turn red and we'll have an official signal almost at resistance. I'm looking toppy. I'm looking for a reversal. I'm looking for it to turn down. Meal, soybean meal, got to resistance. Didn't have any particular signal. Did not get overbought. Slipping back down slowly. As I've said before, in the grain complex, beans, oil, meal, corn, and wheat, I really can't justify any major long-term bullish expectations. It's just not there. They're all low. They all could have a major bottom. They're not developing, in my opinion, quite yet. Maybe in one of them wheat, but I really can't come to that conclusion quite yet. Yes, long-term support is held on soybean meal. And we did get a bullish engulfing right there. That's why the RSI, custom RSI, is green. It was almost at the exact low of the move. I don't have the strategy running on meal at the moment. Sorry about that. But that would be a ER buy signal on that day. It is a bullish engulfing, and it is doing that within the right number of days after it being officially oversold, including on the day that it happened. Well, 2 days after. So I'm bullish, but the resistance level is stopped, and I'm sinking. So we're probably pushed out of the trade. Next, corn. Bought the bottom. Bearish, bullish engulfing at the bottom. Green candlestick. Love it. Now you'll notice that these are not the same body colors as a regular candlestick. I turn them green because they're my ER signal bullish signals. That one didn't work. If it's red, and I'm looking for a red one over here, that one did work. It went straight down for a few days afterwards. That one's green. It didn't work. This one's green. It didn't work because it made new lows afterwards. But that one's green and it went straight up. That one worked. The rest of them are yellow because it was overbought or oversold, or currently overbought, oversold, or was within a few days, and overbought or oversold for yellow. Not a signal, it's a warning, just like a traffic light, yellow. Next chart is the corn 1 minute chart. You can see we're starting to sink here a bit. Really want it to drop off below the previous lows. I don't trust the grain market rallies. Next, we've got wheat. Very, very unusual situation. We've got an official buy signal on the 8th. And right next to it, the next day, Another one. Both of these days are bullish engulfings. Both of them are green. Both of them mean that we have an ER buy signal back to back, because it is. The first signal didn't work. The second one, we had a day trade scalp, always. And the position trade for ER3, based on the second signal, got filled at one tick from the low of the day on March 13th. Now, yes, it went lower the next day and on Friday, but it did not hit our trailing stop. Now, we've had a big rally today. Unfortunately, it's not a bullish engulfing, but awful close. And now we're turning profitable. And that's the ER3 position trade. This is the chart for December wheat, 2-minute chart. There's the break low this morning, around 7:22 in the morning, California time. Almost lower than Friday's lows, but not quite. And we're high and last, coming around very, very nicely. I like what I see. Next, cattle. From way back on a buy signal just in time, December 15th. If you're using these particular kickers, and this is the trailing stop, the yellow dotted line meaning it's a trailing stop from the ER1 signal. The yellow line means it's a trailing stop from the ER3 position trade signal, which got long on the third day after the signal day. So both of them are doing outstanding. I did manipulate the stops on purpose in retrospect, 2020 hindsight, to show you what we could do. I might have gotten stopped out earlier, probably with small profits or larger ones, depending upon the kicker setting. But this is a good example of what it's capable of doing on a longer term basis. You just have to have a looser stop. You can't be real tight with stops, or you won't get very many long-term trades. They'll get stopped out too quickly. Next, hogs. Frankly, nothing happening really for quite a while. We did get a bear signal here, but that didn't work. It popped right back up again. So I haven't got anything. Okay, here's a good green signal right there. It immediately went up for a couple of weeks. But lately, nothing in the hog market. OJ, and I've got to pass on the next bunch of signals because they're the ICE exchange and they're not giving me quotes. I'm upset with this, but I'm going to pass on OJ. Got a great signal a few weeks ago. Flat bottom right triangle. At least I'll talk about it a little bit. Cocoa, no current quotes, so I'm really out of date here. I think it went down some more, but that's about it. Ladies and gentlemen, I'm trying to fix my ICE trades. You have a great day. Stan Ehrlich. Manana.